Hi traders, I want to show an example of a bullish gartley pattern that's set up on the euro yen. The pattern set up on the 30-minute chart, but remember, first of all, we want to identify our higher time frame key areas of support or resistance, and we're currently looking at a daily chart of the euro yen. You can see a very strong uptrend, higher highs, higher lows. Okay, price is rejected, and show you where it's rejected from. It's rejected up from this area up here, okay, this area of resistance, this block up here, and we're coming down to a key level of support. See this area in here? Look at the wick highs, resistance, 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 close above, come back, retest the support, rallies, comes back. Now if we have a look at this swing up, and remember, in these strong trends like this, price is very seldom going to pull back to these major fib levels, okay? So you want to look at these smaller swings. This is a major swing on a 4-hour chart, by the way, and I'll show you now. You can see that 50 level, okay, we've basically hit it and rejected. Now these are areas, we haven't tried to fine tune it yet on the 4-hour chart, but these are areas you want to set up on your chart, okay? You can set your alert and you can just literally wait, okay, and see what happens when price gets down there, okay? You don't have to be chasing price or doing anything, you know, in a rush here, especially if you want to trade these on these patterns on the sort of 30-minute or hourly chart, because the patterns take a good few days to set up. Now, just move over to the 4-hour chart. Remember that area about fine-tuning support resistance. You see this area right here, okay? Very, very nice clear area of resistance. Look at the wicks, and then you see over here this bearish candle, then price breaks up, comes back, retests it, nice rejection. Now we're getting this sort of arc formation coming back to the level. Okay, once again, you see how we tap deeper with this candle, it goes deeper than this, okay, filling more orders below the area, taking stops out. See that area, literally just puts its nose below that area, because we know if you got any buyers coming in here, they're going to put stops below the lows, okay? Accumulation of stop orders here. So this, in its own way, and right here is also a trade, this false break, indication of buying pressure. So we rally, okay, and let's just look at the 30-minute chart, because this is where the pattern showed up. See the rally up here? Okay, nice high highs. We take out, you see we take out this high here. Okay, I like to watch the swing highs that are in and around the area. We take this high out, and then you can see we drop off. So if we take our Fibonacci tool, draw it from the low up to the high, see our price retraces, okay, comes down to the, see this block here, traces to that 62 level, literally comes short of it by a couple of pips. So it's 109.01, just short of the figure, 108.98, okay, like 3 pips. And then it starts to rally again. So once it starts to rally, we take our Fibonacci tool, draw from the high down to the low, okay. There's your confidence right there. Let's just get rid of this. 79, 127, that forms your bullish gartley. So if we label this X at the bottom, A, this is B, this is C, we've hit a minimum of a 38% retracement. So we're looking at the completion point right here. See 79 is 108.76. Okay, so we want to add at least 76, couple pips. Let's call it 78 plus the spread for an entry. And we can just mark this off like that. So have a look in terms of the pattern. This takes like you know, like a whole day to set up. 22nd, like sort of lunchtime, coming back, and this is sort of lunchtime the next day. So it's a whole day to set up. So if you can't watch your chart all day long, these are these higher time frame patterns are great, okay, especially because you can identify these levels way beforehand. So going to the platform now, we'll go into new pending order. We want to buy, and we want to go 108.78 plus the spread of 3 pips, so we'll put it 81. Stop loss is going to go below the low here. I just want to see what a 30 pip. Okay, let's go 35. actually 40. Yeah, so let's go with a 40 pip stop. So decent size stop on that. In terms of take profit, we'll have a look at the higher time frame shortly. So we'll place that in there. So this swing, if we look at it, is 135 pips, and we're using a 40 pip stop loss. As I said, you can always, if you're actively involved, you can look to fine tune these things on a smaller time frame, but it's not necessary. Okay, if you're happy with the risk or the size of the stop, risk is relative to your stop size. Okay, so you don't want to be risking massive amounts. You just drop your lot size down if the stop's bigger. So you can see we rallied. Now we're looking for a spike down into this area. In terms of take profits, let's just look at that 4-hour chart first of all. We have, you see this area here. Okay, we've got resistance, we've got support, we had this big release down. So this area here, definitely a level I want to be watching out for. It's going to be worth about 115 pips. Okay, so that's going to be my target. We've also got this level up here. You could look to take partials here and here. If we have a look at this swing down from this high down to this low, you see that 50 level, also very, very nice lining up there, and the 79 lining up there. So depending on how aggressive you are with this, you could look to take profits at either of those levels, but we're getting more than 2 to 1 on the trade up to this area, so that's pretty decent. Okay, pretty decent. So we just step this forward. You can see it's also visible in the hourly, but the 30-minute gives a little bit more definition. Step this forward here. Okay, so there's a spike down. You see how we spiked lower? Just have a look there. You see this block here, that last bearish candle? We reference that. Bang, into the level. Look at the reaction. Step this forward. Okay, nice bounce. This is where you want to see this level. This is a minor level here. You have support, comes up. You want to see price close above this level. See it rejects. Bang. Comes right back up. Okay, that's bullish. See the wick rejection. Okay, now we're starting to release back up to the next block. We've got a block here as well. So this area up at 109.96. If I just go to the position, up 48 pips. I don't want to do anything with my stop just yet. This is a big pattern. I want to give it a bit of leeway in terms of space to breathe. And once we stop breaking up, I will start reducing the risk. So I think if we get up towards these highs, round about here, see resistance, support. If we get up here, I want to get my stop to break even. Okay, so just go to the 5-minute chart. Just step this forward. Okay, so you see that price comes back, test that area that we marked off on the hourly. Nice reaction. Okay, so we're up at this level here. I now want to move my stop to break even. You can take partials if you want to. I'm still looking higher because of the key area here. And I'm going to get rid of this and this. Okay, you see how we have this reference point here. Comes back, retests. Now we've got this level here. See, we close very slightly above, come back, retest. We now have this block here we want to get through. So getting a bit of reaction off there. Comes back, now test this area. Dropping lower. We want to see it move above. Okay, so we get a little pop up. And we're coming, you see we're testing the highs here. Okay. So what I want to do now is, actually we're already at break even, that's fine. I want to target this area up here. You can take partials, there's nothing wrong with taking partials up here. Okay. But I want to look up to this area, 109.97. I want to look to take part of my position off. In terms of reducing risk on this, or locking something in, you could, if you wanted to, reduce your stop up here. Okay, just be cautious about moving the stop until, well, here again, you're going to do it, everyone's going to do it differently, but as I said, with these bigger patterns, I more often than not give it a bit of space to be on the very small micro levels, and I'm not that happy about the level or the way the market's acting. Then I'll start reducing the risk a lot more aggressive. Okay, so fortunately there's no one way does everything kind of thing. Okay, so we're coming down Okay, so now we're up at these highs. Looking for a little pop higher. In fact, what we can do, I'm going to actually take partials here. Take partials with a spike higher like this. Okay, this can be like a handful, a bit of liquidity up here. So just taking partials off. We've got to stop at break even. I'm going to target. I'm going to watch this hourly level here. Let's drop this down. Just step this forward a little bit. Okay, so we're starting to move off the high a little bit. I want to see us hold above this area. You can see we've got a dealing here. Resistance, support, resistance. Bang, you see the rejection? Okay, these are great little levels for scalps. Okay, back up into the next block, resistance, rejecting. Okay, so now you see the release here. This is pretty bearish, okay? I want to keep a close eye on this one. See where we go from here. Now we spike lower. Have a look at this, okay? See where I said we can move our stop to? Where do you think the market likes to go, okay? It likes to go where the stops are. See, it spikes the low here. That's a handful of liquidity. So once you get that spike there, this thing should start to move up. Okay, it's not necessarily going to do that, but once you see that rejection and a spike lower like that, that's that liquidity hunt. And if you just zoom this in, have a look at this area here. You see this bearish candle, then price breaks. Look where price comes to. Okay, you think the institutional flows are not coming around these levels and below these lows, above the highs? Okay, very, very key. So now we've had a spike up here. If we stop moving above here, the likelihood of us breaking those highs is pretty good because we've taken out a lot of orders here. Okay, you see these spikes? This is a spike up to get liquidity, to pick up orders. So if we move back above here, I'll be confident enough to say we're going to go here or even higher. But this area up here is the next sort of major level I'd be watching. Okay, so there's a pop up. Now we spike into that area. So that was initially our first target. We've taken partials. What I want to do now, once we've got this spike here, I want to now move my stop to just below this area. So the 109.10 I'm going to move this stop to. Okay, and the reason I'm moving the stop now is because of this spike lower and this move through the highs. Okay, because now we've cleared orders, we've picked the stops below here. You see where I said if you want to put your stop, it's amazing where price comes to. Okay, institutional flows, the first thing they ask themselves is where are the stops located. Okay, we need those stops for liquidity, very important. So you see we spike up here. Now we should see a bit of a reaction off this area. Okay, still moving through. That's good for the trade. I want to target this block up here, 110.79. I'm going to put that in. Modify 110.79. If we now just have a look at the 4-hour chart. Okay, so we've moving through this block. You see the rejection. We did get a bit of a rejection there. I would have expected more, but we haven't cleared this level, so we could still quite easily come down and retest. You see, look at the commitment. This is how I like to look at, come on, this is how I like to look at candles here. You see the close above? Okay, it's closing, it's moved into resistance, so it's not the best example, but this candle closes above this area. Okay, the higher this candle closes, the better I will, or the more conviction I'll have on price moving higher. But it closes, comes back. Where does it come back to? Right here. Retest the block. Okay, now we're breaking up. If we just move back to the hourly, back to the 4-hour quickly. So there, just remember this block right here, this bearish candle, a bullish candle before price breaks, and if we drop our fibs from this high down to this low. Okay, that's this 50 and this 79 level, absolute key. Okay, absolute key. So let's just go to the hourly. I'm just going to manage this on the hourly just to speed things up a little bit. Compress this. Okay, so we're feeding higher, taking out orders here. There's not much selling going on here, as I would have expected. Coming up into this area now. Still pressuring the level here. See, there's no selling. If there were sellers, this is the area you would look to see them at. You can see here we come back close above. Let's see if we can retest this area, this little block here. You've actually retested it. These areas here, you can look for possible scalps. If you break, come back, retest. From there to there, it's popped like 9 pips already. See, bang. Close above, comes back, retest. Okay, you want to scalp, hourly, 4-hour chart. These blocks, amazing. Stepping up now, starting to show signs of rejection. I'm watching that target. We've got this area here to protect us. So because we're so close to our target, we've literally come within like 10 pips. I'm going to be very aggressive now, and I'm going to move my stop to just below this area. So I've got this base protecting us, and the reason I'm doing this now is because the risk versus reward, meaning we've got all this open position at risk versus this reward is tiny. Okay, so we got massive risk. Okay, massive open position is risk to you. Okay, don't go and say, oh well, it's the market's money. Okay, we've got this open position, we've got tons of pips on the table versus this tiny little take profit level. I'm not going to give back all this just because of this small little area here. Okay, so I want to move the stop loss up to 110 25. I'm going to move it a little bit below that area just in case we spike into that block. Still moving higher, that's good. Alright, so there's the spike higher. We've been taken in. We're at this key area here. You see our price comes back. Testing this little block here. Breaks through. Should come back now. Test resistance. There's the test of resistance. And now coming back to the next level. See a little spike, bang. Comes back to this level. Spikes higher into this area. So you see that rejection? I'll show you the 4-hour. Okay, absolute key order flow there. Okay, so that was a bullish gartley that's set up on the 30-minute chart. We took partials at 96 pips, and then the remaining off at 198 pips. So real nice trade there.